Hi, my name is Darren Joseph from Tax, and here's a clip from a live Q&A session we did on tax and investment for U.S. exposed persons at the American Chamber of Commerce. This was on September 4th, 2023, and we did this together with John Shoemaker. He's a partner at a U.S. tax law firm called Butler Snow in Singapore, and with Paul DeVierno, the strategist and fund manager at UOB Kay Hian. Enjoy. Is Singapore territorial tax jurisdiction? And if so, under what circumstances would like foreign rental income and foreign dividends and foreign interest be taxed by Singapore?
Okay, that's a related question. So let's talk about territorial. So Singapore is obviously on a territorial basis, so do like Hong Kong. So if you look at territorial, maybe you can call it local totality. But if you look at the Income Tax Act, there isn't any definition on it. So what constitutes territorial or local? So primary is sourced locally, right? So how is considered sourced locally is if you have just a very classic examples. So if you have sales structures in Singapore and you have permanent establishments, that's considered sourced locally. Be it your primary, most of your operations is in overseas, right? So there are still very aggressive structures happening. So I've seen the business. What they do is they have a Singapore company, they have Macau operations, and they have bank account in Labuan. So how do you see this? It's like the head, the body, and the legs is everywhere, right? So the important thing is you really have to look at a few things. Even if you have this kind of aggressive structures, right? IRAS, there's Inner Revenue of Singapore, they may not be impressed. They may probably, yes, you may be operating from abroad, so they may not have a right to tax you, but they still look at a lot of things, right? How you improve the operational tax. So meaning, why do you need to operate from outside when you have a Singapore company? What's the rationale? What's your business plan? What's your business model? Right, among others. So these are the challenges that you will face. And they probably have to be convinced with supporting documentations that you actually pay tax abroad. So let's say if you are operating out from Macau, you actually pay the local tax. And yes, they have to be convinced you have to end up paying tax somewhere else, right? So that's the key few things that they look at.
So in other words, under certain circumstances, if you reside in Singapore but you have dividends coming from another jurisdiction or interest that has not previously been taxed, it may be taxable coming into Singapore.
So foreign income is not taxed only when you remit, right? But you have to prove three rules. Okay, the first one is the headline tax of 15%. The second one is you actually sort the tax. And the third one is you are doing all this is not part of a scheme like avoidance or a tax reduction primarily. So there's a business reason behind. Right. So if you are convinced, you have to be convinced by these three primary criteria.
Yeah, Singapore, like other jurisdictions in Asia, they subscribe to that principal purpose test. So the principal purpose behind any structure must be a commercial purpose, not
Absolutely.
primarily for tax benefit.
Yes.
Okay.
It's very important because you will go under, I think, Section 33. So you cannot design something primarily to reduce tax. That's illegal. So you must have a business substance and commercial substance.
Thank you.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.